This one, the slide on Takaful. Okay, so this is a components for Islamic financial planning. Have you said for the course, Islamic financial planning course?
No,
Hmm? You
I
have said,
drop. I drop
or
it.
you dropped the course. Okay, never mind. This one I just share with you the framework for Islamic financial planning. So when we plan our financial aspect, okay, in our life especially, so we have to know the elements, all the elements here is practices in the Islamic financial industry. Okay, so this framework cater for the first one. The first element is money management. Okay, and then for the household, we can have two types of households. Which households? Those who are in deficit households, meaning that the money that they have is received from a zakat. Okay, from they are recipients. Okay, they have not. They are, I think, B40 group. Okay, the middle incomes and below, or lower incomes groups. Okay, and the surplus households who are above the threshold lah, above maybe middle income and high income household. Okay, so in terms of money management, they have to manage money differently. Okay, between this group lah. Okay, so money management, they basically they receive budget. Their income is from zakat, from the sadaqah. So, and then maybe they can receive incomes from financings, micro financings. So the income that they have. Okay, and then from the incomes they make savings in wadiah, or they can saving from the awqaf proceed, meaning that the benefits from the waqaf property. So from the zakat fund, also they can make a portions of saving. Okay, it does not necessary for them when they receive a zakat money they have to spend all the money. So they have at least to put a portion for saving. So saving not only for the surplus unit but for the deposit units also need to have savings. At least 5 ringgit, 10 ringgit, then should be okay. Okay. But for the net surplus, their okay, so their money is basically coming from their salary. Okay, so their types of saving that they can make, they can invest to have productive investment of wealth. They can invest into fixed deposit or stock or bond or sukuk or a unit trust rate, something like that. And then the intention is basically to maximize potential zakat payment. Okay, their savings. Okay, so zakat, and then they have to manage their money for zakat planning. Because this group of people, they have a surplus of money, so they have to plan that their zakat. So they have to determine the schedule of zakat and then availability of proper documentations, and also they have to plan to increase the zakat portions to the zakat recipients. This in the deficit households. Okay, so a different planning, financial planning for different groups of people. Okay, and then all of us also need to have emergency planning. So Takaful comes in this part. Okay, emergency planning. We have to plan for the emergency. The deficit household also need to plan for the emergency. Okay, so in Takaful we have very I think low contributions, which we call micro takaful, which doesn't need for us to pay a very expensive contribution. So deposit household also need to pay for the need to plan for the takaful also. Okay, and then their emergency saving is wadiah. Wadiah is normal saving accounts, and also a rahnu. Okay, a rahnu is a pawnbroking, Islamic pawnbroking. They have a jewelries. They want to have money, so they just they just approach a pawnbroker and then to get a small amount of money. okay, based on value of the jewelleries. And then for the net surplus household, their emergency planning is takaful lah. So takaful is play a role for these two types of groups of households. Okay, micro takaful for the low income households, and a normal takaful plan or scheme for the net surplus households. Okay. So that is why takaful is needed for the emergency planning, for us to plan our financial aspect. Okay, so the rest are the other aspect in financial planning lah, like investing for goals, the retirement saving, transfer planning like wills, wakaf or wasiat. Okay, okay. So that's okay, the thing that I want to share with you, why takaful is important. Okay, uh, so now we want to discuss on the takaful itself. So far, are you clear why takaful is important? Takaful comes for the emergency planning. Okay. So we have to plan our financial aspect in our life. Okay. So takaful will be a part. Okay, one portion for the Islamic financial planning. Okay, or financial planning lah. So if conventional, they call a conventional financial planning. So then they use a conventional insurance. So for the Muslims, we have takaful to protect our emergency. Okay. So okay, so next we will discuss on the takaful itself. Okay, now takaful, risk and takaful planning. So in Islamic financial, sorry, any question? Okay, so far are you clear?
Yes.
Okay. Okay, so in financial industry, so we have players. Okay, we have players. Among the players that exist in Islamic financial industry are Islamic banks, Islamic investment institutions, Islamic capital market, because we have money market and we have capital market, isn't it? So in money market we have banks. In capital markets we have Islamic capital market lah. Islamic capital market that governed or controlled by securities commissions in Malaysia. Okay, so basically it's meant for investment like a sukuk. Okay, and then the other components in Islamic financial industry is takaful operators or takaful companies, which provide plan or products for the emergency planning. Okay, for future financial planning, to protect wealth or to protect incomes or to protect human life. Okay, so it is a part of Islamic financial system. Okay, takaful is a part, even though people just concern on banks, banks and investment, bank investment. Takaful, we can see like it is not belong to the industry, but takaful is also important, similar with banking system. Okay, because when we are in difficulty, takaful will comes to help us. Okay, to help our family if we die. Okay, so then takaful is always relate to risk, risk and takaful planning. Yeah. So so we need to understand the types of risk, because not all types of risk is covered by takaful or even conventional insurance. Okay, so in defining risk, we can say that uh, there is a peril and hazard. What is peril is the main cause of loss, like a fire, flood, collision, the accident, earthquakes. These are the types of risk lah. Okay, the cause of, because when risk happens, we are incur losses. Okay, so what is the factor of that losses, which is risk lah. And these are the example of risk that may bring losses to us. And then hazard. Hazard is a condition that increase the chance of loss. So when the Takaful operator receive a claims application from the customer, okay, so they will investigate what happens, what are the risks. Is it a pure risk? Is it the risk happens unintentionally, or risk happen because of moral hazard like this? So the condition that increase the chance of loss. So the company will investigate what are the conditions, what are the real story. Okay, so hazard is can be divided into physical and moral hazard. So physical hazard, like a physical, we can see uh, the conditions that bring to the loss is also risk. eh. So like a defective wiring in a building that increase the chance of fire. So and other thing is moral hazard, the conditions, but because of people behavior. Okay, like intentionally hurt oneself to collect insured claim amount. So when the moral hazard happen, basically the Takaful operator will not approve the claims when it is proven lah. Okay, moral hazard occurred for certain situations because it is by intention. Okay, so physical hazard, the condition is easy to detect, but moral hazard, the need to have a further investigations. So these are the types of risk, and then the condition that bring to the chance of loss. It is a risk, but it depends on the condition. Yeah? So risk in Islam, what Islam said about risk. Okay? So in Surah Al-Baqarah, verse 155, Allah said, Bismillahirrahmanirrahim, وَلَنَبْلُوَنَّكُمْ بِشَيْءٍ مِّنَ الْخَوْفِ وَالْجُوعِ وَنَقْصٍ مِّنَ الْأَمْوَالِ وَالْأَنفُسِ وَالثَّمَرَاتِ وَبَشِّرِ الصَّابِرِينَ. And we will surely test you with something of fear and hunger. So fear and hunger and loss of wealth and life and fruits, but give good tidings to the patient. So Allah actually recognize the concept of risk. These are example of risk. Some things of fear and hunger and loss of wealth. Okay. So Takaful maybe relate to the loss of wealth, life, and hunger, because Takaful take care of financial protections. Okay, financial protection which indirectly protects a mental protections. Okay, when we have is different when we do not have protections towards our wealth, and if we already have protections to our wealth, we can sleep deeply, or we can macam doesn't need to be worried anymore. Okay, so Allah said, but give good tidings. It is a good for the good tidings to the patient. As-sabirin here. So then we have to define what is the sabirin. What is the patient mean? Okay, the patient mean here. It is not just we sit and we just wait for the risk to happen and then we only pray to Allah. No. Okay, patient here means we have to do something. Okay, we have to give our effort. Okay, to mitigate, or not to mitigate, to face all the uh, tests and risks, tests or risks that Allah have planned to us. Yeah? So and in the hadith, this is a hadith from Tirmizi. Okay, Tirmizi. The Prophet Muhammad SAW noticed a Badawin just left his camel without tying it. Okay, and then Prophet Muhammad asked the Badawin, "Why don't you tie your camel first? And then after that you can pray to Allah." The Badawin answered, "I put my trust in Allah. Okay, I have Allah. Allah will take care of my camel." But the Prophet said, tie your camel first, and then put your trust in Allah. So we need to put effort first, and then we can pray to Allah. For sure, Allah will take care of it. So this hadith are related to the concept of takaful, which for the emergency planning. Okay, so we have to do something to plan for our emergency, so that we can after only then we can pray to Allah. Okay. Okay, so there are two types of risk. Only one type of risk will have a coverage from the takaful. Okay, so the first one is pure risk and second one is speculative risk. So what is pure risk? So pure risk is the possibilities that can result in only a loss or break even. Okay, the possibilities that can only result in only loss or break even. So pure risk is pure, is original risk. It happens without our planning. It comes to our life. We don't even think or plan about it. So it is purely coming. So when it is happens without our planning, without our preparations, the result will be loss. We will incur loss, or we do not incur loss. For sure, we will do not profit because of that, because we never plan to have that kinds of risk, like a fire, lightning, flood, storm, premature death, death lah, normal death, accident, theft, okay. And then the second types of risk is speculative risk. Okay, so what is speculative risk? From the word of speculative, which is speculate. We can speculate. We can plan. Okay, the possibilities when it is happens, there are three possibilities instead of two. So the possibilities of result, okay, of this uh, uh, risk when it is happen, we can incur loss. We do not incur loss, and also we can profit from it. Okay, like investment in stock market, foreign currency fluctuations, venturing into a new business, because we can speculate what will happen in future, whether we can get a profit or break evens or losses. Okay, so that is why only pure risk will be covered. It is fair to all parties. Okay, if we already know what happens in future, for sure we can know whether we can make a profit or not. So it is unfair if we already protect towards what ever happens that we have already know about it. Okay, so only pure risk will be covered, not the speculative risk. Okay. So under pure risk, because then now we only focus on pure risk lah, because it's related to the takaful. Takaful only cover pure risk. So there are three types of pure risk, which are personal risk that happens to our personal life, ourself, property risk, it happens to our property, and liability risk, it happens to the third party that we are liable to. Okay, the third party. Like if you are a boss or owner of the business, you have employees, so you are liable to your employees, so that you as a owner of the business, you can take a protection from takaful to cover the third party, which is your employees, because you are liable or responsible to them. Yeah? Okay, so under personal risk, there are death, premature death. Why we call premature? Because it is premature lah, because we sometimes we expect that we will die when we are 60 years old, but it happens prematurely. It happened before 60 years old. We died at 50 years old. So we call premature death, because uh, we do not know when we will die. Okay. And then the second one is insufficient income during retirement, meaning that protections over income protection, poor health, health protections, medical protections, and protection for the unemployment. Okay, there is also protection for the unemployment lah, income. This one income protections too. Okay, okay. So, okay, so premature death. This one personal risk. Second one is property risk, risk that happens to our property. Okay, there will be a financial. There is a what is a direct loss or property risk? Property risk have two types: direct loss and indirect loss. So direct loss is when the risk happens it is directly happens to the property, like a physical damage of car, destructions or theft, fire for the buildings, okay, house damage due to the flood. So this is direct loss occurred to the buildings, and indirect loss that when it is occurred to the building, so there will be other losses like a financial loss that result indirectly from the occurrence of a direct physical damage, like if the um, fire on the buildings. So what's inside the buildings, like a cash, like a laptop, all the electrical appliances, something like that. So it is also lost, but it is indirectly. Okay, so for this, the cover protections, we have a protections toward the buildings, toward the car, and also we have a households protection to the whatever to the apa the indirect lah, the other for example in the buildings, what inside the buildings, we have other things, other property inside the building, so there will be additional coverage for that. Okay, okay, and then next one is liability risk of third party, okay, that we are liable. For example, the court may order you to pay substantial damage to the person you have injured. Like we incur accident, so what? Uh, we accident with third party that be caused by us. So we are liable to pay all the expenses, the losses happen to the third party. So our insurance or our Takaful protections will cover them. Okay. Like if we subscribe to third party protection. So if you realize for the like a motor takaful, there will be two types of coverage, the first party and the third party. If first party, we only cover ourselves. If we subscribe to the takaful protection for the third party protections, it means that we protect that a scheme also protect the third party that injured because of us. Okay, so example two, business firm can be held legally liable for defective products that could cause bodily or property damage to consumers who use this product. Okay, so the business owner, uh, if they are worried that the product will cause harm to the consumer, they can also subscribe to the protections for the third party liability. So in case anything happens, there will be a coverage to pay all the losses. Okay, so far are you clear with this? What is risk, the types of risk? Okay, so far clear?
Yes, madam.
Okay, very good. So now, so far we have discussed risk, and only pure risk will be covered. So under pure risk, we have personal risk, we have property risk, and we have a third party or liability risk. Okay, so now how to handle this risk? Okay, how to handle this risk? We have one, two, three, four, five actions that we can do when risk happen to us. Okay, so one of it is related to the takaful. Okay, so I just discussed briefly, like say risk avoidance. We can avoid the risk at all except death. Okay, risk avoidance, like we are worried to incur accident, so in the road, so we avoid the accident by just staying at home. We avoid the risk at all. Risk retentions, we retain the risk. We know that it is risky to drive on the road at the during rainy days. We still go out and drive our car. Okay, but uh, how we retain it? Maybe we use a public transport. Okay, we have other alternative. Okay, risk reduction, we reduce the risk by, let's say, risk of having fever. You can reduce the risk by using umbrella during a raining days, or you can reduce the risk by What else? Take care of your health. Eat a vitamins to ensure that your health is good. So you reduce of a risk of illnesses. Yeah. And then risk transfer, you transfer the risk to other party that able to accept your risk transfer. Okay. So risk of like accident in the road, you transfer the risk by you ask others, by you order a food grab or food panda, because you are worried that if you go out you will having a accident, so you order food online. Okay. So that risk of accident is transferred to the panda food rider lah, or grab food rider. Okay. You transfer. Yeah. And then risk sharing, you share the risk. You are you can accept the risk, and then you share with your family members. You drive together with your family to go out. Okay. Okay. Excuse me, I have to accept your friends. Your friends just coming, wanted to join us. Okay, so let me proceed. Okay, so among these five, basically risk transfer is practiced by conventional insurance, and risk sharing is practiced by Takaful. Okay, we will discuss after this. Okay, this one, the concept of risk sharing and transfer. Okay, okay, Takaful and conventional insurance. Okay, Takaful practice risk sharing, and conventional insurance practice risk transfer. So how basically they transfer or they share the risk. So in Takaful, basically the contract that is adopted is tabarruk contract. What is tabarruk contract? Tabarruk contract is a donation contract. Okay, donation contract coming from the participant, coming from us, coming from the customer. Okay. So when the customer approach the Takaful operator, okay, when they approach the Takaful operator, and then they inform them that I want to protect my life. Okay, I want to protect my life. So the Takaful operator said, yes, we can value your life, and then you have to pay a certain contribution. We call contribution. Why they call it as contribution? Because Takaful is based on donation. When we donate, we actually contribute. Okay, so one customer come contribute a portion, 100 ringgit, and the other will contribute based on the risk protection that they want, and based on their profile. So they can contribute 200, 300 based on the types of products. So all of that basically a contribution. Okay. So when the Takaful operator receive the contributions from the customer, okay, so they will pool all the contribution. So when any of the customer die, the Takaful operator responsibility is to take a portions of the contribution that they pull, and to pay, and not we do not call it to pay, to give to contribute to the needy, to the family members of the deaf participant though. Okay, so in this case the Takaful operator, they are the fund manager, not the fund owner. Okay, so fund owner is a participant. Okay, not Takaful operator. Okay, I see. I do not know whether I can. This one pointer subtitle. Okay, pen. Okay. Okay, so through risk sharing here, eh, through risk sharing, basically a risk of all participant, like participant A, oh, because I draw using mouse pad. Participant A, uh, participant B, okay, participant C. A lot of participant will come, okay, to give a contributions. We call a risk fund, because the contribution is meant for the risk. We call a risk fund. Okay. we call risk fund, and this risk fund is managed by Takaful operator. Okay. So when the risk happens, Takaful operator will use this risk fund, okay, to pay to the takaful participant that having a difficulty like a death, like an accident. It depends on the product that they subscribe. So in this case, all the risks basically are shared among takaful participant, not shared with takaful operator. Takaful operator here just a external member, external party uh, that manage the risk fund on behalf of the participant here. Okay. Uh, okay, so this is a risk sharing concept based on tabarok contract. Okay, risk sharing concept based on tabarok contract. So how about risk transfer? Risk transfer is practiced by conventional insurance here. Conventional insurance, they transfer the risk from the customer or they call a policy holder. Okay. Okay, I draw not using mouse pad. Okay, policy holder. In here, participant, the customer, we call participant because they participate into the tabaruk contract. Here, we call policy holder because of they hold their policy. So when they approach, it seems when they approach the conventional insurance company, okay, and then they want to protect their risk. So what the company will say to them, okay, now you transfer your risk to us. Okay, we will protect you when risk happen. Okay, by transferring your risk to us, you have to pay premium. They call premium. Eh? Premium, a certain amount of money by transferring a risk to the conventional insurance company. Okay, so when they pay premium to the company, this premium will be belong to the company 100%. Compared to the Takaful, the risk fund here not belong to Takaful operator but belong to the all the participant here, the assured. Okay, this one risk transfer. When something happens to the policy holder, so the company will pay the compensation. Not that compensation not coming from other policy holder. No, the company itself. Okay, so because the risk is already transferred to the company, so the company will bear the risk. Okay, through these other types of contract that they practice, which is buy and sell contracts. They are selling a protection to the policy holder. The policy holder buy the protections from the company. Okay, so what's the price? The price is the premium. Okay, the premium. Okay, not contribution lah. They hold the policy until anything happen to them, they will show their policy and then they will get a protection. So now their risk is already transferred to the conventional company. Okay, and the premium here is belong to this company. Okay, belong to this company. Okay, so far clear? Are you clear?
Yes, madam, it's clear.
Are you still here?
Yes, madam.
Yes.
I thought I'm alone. So I don't know, I didn't hear anything. Okay, so far clear, yeah? Okay, so now let's move. This one. Okay, so Takaful, we have a participant here. We have participant and they make a donation uh, into Takaful fund or risk fund. And then it is managed by Takaful operator. These are among Takaful operator in Malaysia that we have Takaful operator. So this fund is belong to the participant, not belong to the operator. The operator become a trustee that entrusted to manage the fund. Okay. And then conventional insurance through buy and sell contract, like a buy and sell insurance policy. So the policy holder here, they buy the insurance policy from insurance company sell the policy to them. Okay, they just when they buy, they actually transfer their risk to the insurance company. Okay, three prohibited elements. Okay, why conventional insurance is considered not Islamic? Why it is not? Lah, because in 1972, during a meeting among the scholars in Jeddah, Mecca, okay. So all the Muslim scholars at that times have agreed that conventional insurance that was practiced during that times and until now having elements of riba, gharar, this one gharar and maisir, not maisir and maisir lah, this one gharar. Ini, right, gharar What is riba?
Interest.
What is interest?
It's the amount that
Explain to me what is riba or
it's a
interest.
it's the amount that
Apa tu?
receive to the principal.
Anyone?
Yeah.
Anyone master student? I know you have learned about it during your undergrad and it's always been discussed.
Riba is usury.
What is usury?
It is unjustified easy money, the gain of easy money.
Give example. The gain of easy money. Is it gambling? Easy
Interest
money?
rates, the interest they get from the conventional bank.
Okay, so the interest that give by the commercial bank, why it becomes an interest, easy money for them? Why? Why we cannot practice like them? We give a loan and then we give a certain interest rate to the customer. Then when we practice it, it's riba. Any explanation? You should clear with riba. You cannot say like riba is interest, and then the practice of conventional banks they put an interest rate that is riba. So what? Why it is considered as riba? Why what is riba? And then why we say they are not following the Sharia or the Islam? Okay, why Islam prohibit riba? Okay, why they cannot charge a certain interest rate to the financing given to the customer? Islamic banks also charge a certain profit rate to the customer. Okay, so you have to know why it is not similar. When the conventional bank they practice an interest rate and then the Islamic bank practice profit rates. It is not only difference in terms of the terms that is used. If you only look at the term that they use, is possibly you can say no difference between the conventional and Islamic bank, isn't it? So you have to know what's the gist, what's the reason behind that. Okay, the reason behind riba. Why riba it's haram? Kan? Because Allah said in Surah Al-Baqarah kan, wa ahallallahu al-bai' wa harama riba. At the same time, trade is like riba. Kan? Trade is like riba in the same verse. Okay. So in trading, okay, when we do not if we practice a trading, because when we trade was basically we will put a certain profit rate. That is why in that verse Allah said trade is like a riba, but Allah permit the trade but not a riba. Okay, when we do a trading, we put a certain profit rate. It's like a riba, but trading is okay, but not the riba. Okay, so in for the banking, they practice riba is because of because riba, the words riba, we can define it as excessive money. Excessive money out of nothing, or excessive of money because of durations of time extension. So in banking, basically we do not financing lah for sure. No cash element. It is deferred, always deferred, because people will approach the bank because of they don't have money. If they have money, they do not approach the bank, isn't it? So deferred payments is practice in the banking system. Okay, so in Islam, when we want to borrow our money to people, only one types of loan or financing that is a halal, which is a benevolent loan. Okay, whatever amount that we give them, that's the only amount that we have right to receive. If we borrow our friends 100 ringgit, so we borrow 100 ringgit to our friends, we only have right to receive 100 back in return from them. Okay, that is the only financing that is allowed in Islam, which is no additional amounts over the principal. Okay, so how about Islamic bank? Islamic bank, they borrow money to the customer, isn't it? Okay, and then they charge a profit rate. So maybe without a full understanding on the concept of riba, people would say that no difference between Islamic bank and conventional banks. But there are differences. The first one is the Islamic banks, they do not practice a loan contract. It is not a loan contract. Islamic bank practice a buy and sell contract. Okay, a trading contract or buy and sell contract lah, like BBA, buy bertambah ajil, like tawaruk contract, murabahah contract, ijarah, a rental contract, not a loan contract. Okay, so because only one type of loan, which is Qardul Hasan loan. Have you heard about Qardul Hasan loan practiced by any of the Islamic banks in the world? No, no. None of the Islamic bank practice Qardul Hasan loan. If they practice Qardul Hasan loan, they will get lost because no profit for them. How they want to survive? So that is why they do not go for loan contracts. Okay, they choose a finance buy and sell contract. When they choose buy and sell contracts, in buy and sell contracts, okay, there are elements of a price, and okay, and there will elements of price. So they are free to determine what price that they want to put. But price in Islam, when we want to set any price towards our goods or product that we want to sell, that price might need to consider a certain elements that we call inward. Okay, inward elements that will consist of effort, risk, effort and risk. There must be effort from the business owner. There must be a risk that they will face in future. So based on the risk and effort that they counted, they can put a certain price towards the product that they want to sell. Okay, same with the Islamic banks, there will be a risk for them, like a market risk. Okay, like maybe a risk of the customer risk of the customer, like in case the customer cannot pay the debt later on. So they have considered all those risks and their efforts and all the expenses that they happen to them, like to pay the salary of the staff. So they put all those elements into the price of the good that they want to sell, or they put into the financings products that they offer to the customer. Okay. So it is not a loan contract for the Islamic banks, but for the conventional banks, they simply adopt a loan contracts. So for them, for conventional perspective, their objective is profit maximizations. Okay, and then their success is based only a profit, a monetary success. Okay, so no elements of success in this world and hereafter. So they only have one world, which is to maximize profit in this world. So it's up to them. Okay, so that is why they just straight away adopt a loan contract, and then they put any interest that they want based on their objective, profit maximizations. No harm for them, because that is their principle. Okay, the principle of economy, profit maximizations. Or investment principle pun profit maximization, isn't it? Uh, okay, so in Islam, only one types of loan is allowed, benevolent loan. Okay, so that's why all Islamic banks will not opt to have to offer financing based on Qardul Hasan or benevolent loan. They adopt other types of contract. So in adopting other contracts, they have to follow the tenets of that lah. Like a buy and sell contract, they have to choose which will become a subject matter. Like a house financing, the house will become subject matter. So the price that they offer, so the price will be the principal, the house price together with the profit. The profit is already catered all the risk, the effort, the expenses that will happen, okay, to the bank. Uh, okay, so that is why it is allowed for them, okay, to offer home financing with a profit rate, because they adopt a buy and sell contract, no elements of riba. Okay, but in conventional banks, they simply adopt a loan contracts whereby for them profit to be maximized, so they put elements of interest, and then when we cannot pay for certain period, so they have right to charge. They will charge additional amounts, which is compounded. They will the interest rate that imposed to the loan given to the customer, because that is their principle. No harm for them to charge. Now it depends on us which one we prefer. We prefer for the conventional one, or we prefer to the Islamic products. Okay, if it's in Islam, if it let's say the customer fail to pay for certain period of times and certain amount of financing or payment, monthly payment, for example, so the bank cannot charge um cannot compound it, the profit rate. If the bank compound it, so they will incur also a riba. Okay, because extensions of time, they fail to pay. Maybe the bank can only impose compensations because they receive a loss because they do not receive a payment from the customer. So they charge a compensation rate, which we call ta'wid or compensation rate. Compensate whatever the total loss that happens to the customer. Okay, but in Malaysia, the central bank only allow for the bank to charge the compensation rate to maximum 1% only. Okay, 1% only to prevent the bank to take advantage over the customer. Okay, if they want to penalize the customer because of late payment, that penalty amount should be channeled to the charity, not becomes a profit for the banks, that the Islamic banks. But for the conventional banks, whatever charges happen to the customer is belong to them. Okay, not necessary for them to for charity whatsoever. Okay, but Islamic bank, whatever charge imposed to the customer, it must reflect real expenses that happen to the bank. They cannot take advantage over the customer. Okay, that's the I think a basic like explanations on riba. Okay, why riba that happen? Why riba happen in conventional insurance? Conventional banks, also conventional insurance lah. Okay, and not for the Islamic banks. Okay, now we want to talk about riba in conventional in insurance perspective, in takaful perspective. Because takaful it is not a business of financing, not business of give money to the customer, do investment, no. Okay, takaful is a business of risk protections. It is about risk. And then risk management. Okay, fund will be managed by the company. The Takaful fund will be managed by the Takaful operator, okay, or by the conventional insurance lah for the insurance company. Okay, so which part of the conventional insurance consists having riba? Riba also riba happen in conventional insurance when um, the money that they receive from the policyholder, they invest the money into a non-Sharia compliant investment activities lah. So they receive because riba also apa nama dia is defined by excessive amount of money which is without undefined undefined resources. We do not know. Okay, so in order to maximize the profit, the conventional insurance company will make investment into a gambling company, into a non-Sharia activities. So that's having a riba or usury, okay, from that investment. So income from that investment is considered as riba also. Okay. So just now on the bank perspective, I explained about riba for the financings because we have two types of riba. Riba an-nasi'ah and riba al-fard. Riba an-nasi'ah relate to the financings. Okay, and riba al-fard relate to the trading, buy and sell, or trading lah. Trading that is unequal exchange of trading. So investment, it's relate to the riba al-fard. So the company just put maybe small amounts of money, but they receive a lot in exchange of that money. It is unequal exchange. So it's having a riba elements there lah, especially for the non-Sharia compliant activities. Okay. So why it is allowed for the conventional insurance? Because the money, the premium that they receive is 100% belong to them. It is no longer belong to the policy holder. So that is why it's up to them lah, where they want to invest. So for sure they will invest into the investment that will generate more money, more incomes, more profit to them. Okay, but not a Takaful company lah. So the Takaful, it is controlled by central banks. All the investment must be complied with the Sharia. So they have report all the investment to the bank negara. Yeah. So that is riba. How about gharar? See, okay, gharar is uncertainty. Which part of conventional insurance is uncertainty? So gharar happens for the subject matter. Okay, for the subject matter. Subject matter of conventional insurance. Okay, because conventional insurance adopt buy and sell contract, kan? So buy and sell contract, which one is the subject matter? Because in buy and sell contract, there should be a offer and acceptance. Okay, from Islamic perspective, offer and acceptance, the parties, the subject matter, and the price. Okay, so offer and acceptance and the parties are here, the policy holder and insurance company. The price is the amount or the premium. The subject matter, where is the subject matter? Insurance policy. But the policy, this paper is not the real subject matter. This policy consists of risk. Okay, risk coverage. So what are the real protections? They just list down the coverage, like say death benefit 100k, accident benefit 200k, like hospital allowance, but all the list here is not happened yet. Then they just list down. Kan? Okay, so it is happen, it is uncertain. The risk protection is uncertain. When it is happen, like accident benefit, then it will occur and then it becomes certain. But at the times of they sign the contract, all the list there in the policy is not happened yet. So it is gharar, uncertainty, whether the policyholder will incur that all the listed risks or not, or any of the death, when, and then how it happens. Okay, so that's elements of uncertainty in conventional insurance. Okay, but in Takaful also, the risk here is uncertain because it's all about the same one. Participant wanted to protect a risk, isn't it? Okay, but because of this is donation contract, not a buy and sell contract. In donation contract, um, it does not necessary to have the subject matter. Okay, when we want to donate, we can simply say that, okay, I want to donate 1,000 ringgit. Not compulsory for us to show the recipient this is the money. 1,000 ringgit. Okay, we can deliver tomorrow. We can deliver by online transfer because it is not exchange contract. It is just one unilateral contract coming from one party only. But in buy and sell contract, it is exchange contract. Once we want to exchange some things, that subject matter, that objects must be really exist to make it fair to all parties, because one party will give a money, that money must exist, and the other party will give a certain subject matter, isn't it? But in the insurance context, okay, yes, the policyholder will give a money, the premium, but in return, what's the insurance company give them? Just a piece of paper. That piece of paper does not really means of the protections. Okay, so the protection, it will come in future, but we do not know when it comes, so how it comes, can. So it is uncertainty. Okay, gharar element. Okay. So far, are you clear?
Yes, madam.
Is it clear?
Clear.
Yes.
Okay, very good. Okay, and then the final, the last element is Maisir. Maisir is gambling. Gambling. Gambling is like what is gambling? Gambling we put something, okay, and then we intend to have bigger than whatever that we put. Like say gambling in investment, something like that. Okay, we put 10 ringgit, but we hope that we will get 1,000 ringgit in future. So we just gambling, okay. So in gambling, we do not know the outcomes yet. So that's why we call gambling. We do not know the outcome. Okay. So in conventional insurance, which part of gambling happens? So when the policy holder, they buy the insurance policy, they hold the policy 1 year and 2 years and 3 years, just waiting if anything happens to himself, to themselves. Okay, if anything happens, if let's say they die, ah, they die. Okay, when they die, okay, when they die, who will win? Their family members, isn't it? Because the family members will get protections, death benefits. Who will lose? Insurance company. Because insurance company will have to pay the protections to the policyholder. And then, okay, second case. They hold the policy 1 year, second year, third year, 10 years, 20 years, until the policy expired or the policy matured. Nothing happens to themselves or to him. Okay. So in that case, who will win? Who will win?
Insurance company.
Yes, insurance company. Why? Why?
Because they didn't pay yet.
They do not. doesn't need to pay any single cents to the policyholder because nothing happens to them. Who are the losses here?
Yeah,
The policyholder
participant
are the
and loss. Yeah.
will uh, not become a winner lah. So the winner is insurance company. The loser is the policyholder because nothing happened to them. This is a gambling game. Okay, compared to the Takaful company, if nothing happens to the Takaful operator, Takaful scheme, if nothing happens to the policyholder, basically the fund that they collected here, okay, the fund that they donated here, is already contributes to the other participants because they are mutually contribute and mutually helping, mutually protect, share the risk. Their money is already used to help the other participants. So it is win-win situations. Even if something happens to them, or if nothing happens to them, all are winners because when they donate for the sake of Allah, okay, so basically they make donations for themselves. It is an investment for the hereafter. Okay, so they will not regret if nothing happens to them. So nothing to do with Takaful operator. Takaful operator just a manager. They receive a profit in terms of a fee, agency fee, a performance fee, something like that, and then administrative fee. Okay, so it is among the participant here. Yeah, there's a maisir or gambling happen in conventional insurance. So can you think what is this? What is this?
It
Is it
seems
orange?
like orange.
Orange.
Side, it is a kiwi.
Ah, it is kiwi, but the skin looks like orange, not a kiwi skin, isn't it? So
Yes.
I can say here, this is between Takaful and conventional insurance. Okay. When we look at the skins, it seems okay. It is a business of risk protections, but when we try to understand it, taste it, it's basically a difference between Takaful and conventional insurance. Because Takaful, the objective of Takaful is to two. The first one, word E, matters to protect financial aspect, and second one is actually to help to increase a reward for the Muslims in the hereafter when they assist other participants. Okay, so there are differences lah between takaful and conventional insurance, like these fruits. Difference. Okay, do you want to have the skins or the inside? Which one? Which one important? Which one you want?
The inside.
The inside, right? You want to feel it. You want to taste it so that it will benefit our body later on, kan? So same with Takaful. So these are Takaful products. We have two types of Takaful products. We have general Takaful and we have a family Takaful. Okay. General Takaful cover basically family takaful cover people life, cover people, all about people, health, life, family. But general takaful cover other than people like a car, buildings. Okay. So example like takaful my motor. This is general takaful. Takaful my house owner. General takaful. Takaful my fire. These are all general takaful. Okay. So and then this is a family takaful. Cover education, investment, retirement, saving, health, and protection lah. So this is family takaful. More examples here. We have nowadays we have a takaful for Hajj, takaful for this one for health, for MERS virus, coverage upon accidental death, double coverage upon accidental death in public transport. Okay, and then other things, eh? And then Takaful for educations, we have a latest, okay, Takaful link for educations. It covers our children's and the family members, the family, the guardians that pay for the contributions. If anything happens to the father that pays for the contributions, so the rest of the contributions will be paid by the company. Okay, for education. So before we end, so these are among the issues in Takaful. So the first issues is Takaful agent awareness and customer awareness. So awareness, I think awareness issues already been searched long time ago, 10 years ago pun people already started to investigate the awareness of customer. But still the awareness of agents and the customer are still not up to the high level. People still do not aware what is exactly the takaful and the conventional insurance. Okay, what's the needs of the takaful? Is it only people, because now in this world people only talk about money, isn't it? They only can see money. They do not can't see the paradise, okay, the hereafter life. So they do not aware that the needs, advantages of the takaful for the hereafter life. So takaful agents also, they are but the tendency is to maximize the commissions, so they don't care the product that they offer to the public. They can some certain Muslim agents, they sell both products, takaful and conventionals. As long as the product can give them commissions, they will sell it. So this is very, this is worse lah. Okay, the second one is practice of nomination form among takaful operators from the agent perspective. So how the nomination form is practiced? What is nomination form? Nomination form is a form that nominate who at the end of the day for one, for takaful certificates will receive a benefit from the certificate, like a death benefit, who actually will receive death benefit after this participant die. For sure, their family members, is it? So who are the family members? That can be listed in the nomination form. Okay, so certain takaful operator, they don't have nomination form at all. And other takaful operators that is good, they prepare a nomination form, meaning that the takaful participants should aware that in case anything happens, who actually will receive the benefit, especially when during a death scenario. Case death, who will receive? Is it a wife only, wife and the children underage, or other family members? Because for the Muslim, when we die, actually all our assets it's should be distributed based on faraid law, law of inheritance. Okay, so how about takaful? Okay, how takaful operator manage this part? Okay, whether they insist all the takaful participants to follow the law of inheritance, or they can provide a certain options. Nowadays they have provide a hibah options, because in takaful we are allowed to give apa to have hibah contribution, which is a conditional hibah. Meaning that what is hibah? Hibah is a gift, isn't it? So when we die, the condition is when we die. When we alive, no hibah can be executed lah. So the condition is death. When we die, so all the takaful benefit should be given to list of the people that we have list down, based on the percentage that we have specified. So wife 50%, the first child 10%, second child and parents 20%, like that. So that is hibah practice lah. in the nomination form. Still, we have to, there is no standard form of nomination that is practiced among Takaful operators nowadays. Still, they are different in terms of practices. Okay, so hibah products, I think this hibah issues is because of hibah is already approved long time ago to be practiced in Takaful, but just the agency or the Takaful agents or Takaful operator, they make it as a, they market hibah and they separate with the term, the hibah is hibah product. They make it a hibah products. Basically, all Takaful products can adopt a hibah. Okay, not necessarily hibah products. So the name of hibah product is misuse because hibah is a gift. So they cannot name Takaful is hibah Takaful because all Takaful products can use hibah. Okay, so this one marketing issues, they market the product based on the hibah elements. I think it is not match. It is not correct. Okay, and then distribution channel, the relevance of using agent in digital era, because nowadays people look for all the digital online distributions. So Takaful operators have also offered a Takaful products online. The customer can simply just subscribe to the product by online, no need to use agent. So we can also investigate the relevancy of using agents, okay, to approach the customer and to be a part of distribution channel. Okay, what is this distribution channel? Distribution channel is a marketing channel for the Takaful. So nowadays, I think Takaful have many distribution channel. So most of the famous distribution channel for Takaful is bank that we call Banka Takaful. Bank, they collaborate with one Takaful operator. They market the Takaful products. They mix with their products like home financings mix with MRTT, mortgage reduced term Takaful products to protect the house, to protect the house owner. In case anything happen, death, so the banks or the Takaful will pay the balance or the financing to the bank. Okay, so most of the times profit for the operator coming from Banka Takaful lah, bank. Why? Because of the bank products is especially home financing is expensive compared to the individual coverage kan. Rumah, uh, a house now 300k 400k, so the Takaful contribution is based on percentage of the total price of the house, so the total contributions will be higher compared to the individual products. Yeah. Okay, so Banka Takaful also use a broker, the third party that market the products, and using agents, and using nowadays we have online. There is the distribution channel for the Takaful. And okay, next issues is e-hailing Takaful. Very limited nowadays. Only few of the operators offer this product, but still we need to investigate whether these protections really give a benefit uh the e-hailing driver and e-hailing customer. Okay, we have to investigate lah. E-hailing Takaful. Okay, Takaful for Grab driver, Takaful for Grab, Takaful for taxi. Something like that. So and then micro Takaful and co Takaful. Micro Takaful mean for it is cheap Takaful lah, or for the below income group, but still is open to all. But because of low or small contribution, the protections also quite small. Yeah? And co-Takaful, what is co-Takaful? Co-Takaful is Takaful products that when I give you example, we admitted to the hospital and the total hospital bill is 10,000. If we subscribe to Co Takaful, in the certificate it's stated that 10% of the fees should be borne by the customer and 90% by the operator. So we are co protection. We are co providing protections to ourselves lah. Okay, so 10% of 10,000 is 1,000. So we have to pay using our money 1,000. Okay, because 10%. So 90%, okay, will be backed by the Takaful. It is collaborations. Yeah. And then fintech and effects to performance of Islamic financial institution or performance of takaful operators, the financial technology, we can see we have to observe that whether takaful operator using artificial intelligence to market the products or to provide services to the customer. So, and then we can also investigate the performance of takaful operator when they adopt fintech. Fintech can be many lah. Fintech not only AI, fintech can be in terms of payment gateway, payment system, in terms of smart contract here. What is smart contract? Smart contract is takaful contract that is signed online. It's smart online. So smart contract also having issues of maybe certain details or information is not disclosed to the customer because this is contract. The agreement is signed online, so we have to make sure lah the agreements, the wordings is correct, and then it's provide enough information to the customer, to the participant. Effect of fintech to intermediaries, effect of fintech to the agents lah like this. Okay, intermediaries in Takaful can not only agents but it also third party that involved in the marketing in Takaful business. Like they have a TPA. What is TPA? TPA is a third party that manage the Takaful funds for the payment case context lah. Like if we go to the hospital, we pay uh, and then we show our Takaful certificate, medical card, okay, to the hospital. So the hospital will link our card to this third party. Third party will trigger our application first, and then they actually deal with hospital, not the takaful operator, not the company. The company will use a third party. Like if you go to the clinic hospital, they will paste a sticker. Like apa contoh sticker? Sticker like they want all the third party that manage the payment system. Like a panel clinic. There are companies, certain company that have clients that have a link with many operators. Okay. Okay, and then potential of wakaf in structuring takaful products. So the wakaf elements, I think for the past years I have built one framework of wakaf based takaful for flood victims. So the elements of wakaf. So wakaf can exist in takaful when the takaful participants they subscribe, they pay the contributions. Maybe a portion of the contributions will be meant for wakaf purpose. So in this case, like the participant give 100 ringgit, they inform the takaful operator 10 ringgit is meant for wakaf. So takaful operator need to separate a wakaf fund for this, and then they collect from other participant. When it is enough, it is will be channeled to the flood victims. It will channel to the Islamic Religious Council for the wakaf fund, something like that. Okay, do a wakaf project, something like that. Okay, so that's all for today for the takaful. So any question?
Yes, Assalamu alaikum. Thank you, madam. Firstly,
So any question?
yes, madam.
Okay.
I have three questions here.
Okay.
Firstly, Takaful, someone or participant pays a fund to the Takaful, they base it on donation or tabarruk. So it's also risky to manage risk. So how can these two words of donation and risk managing can work together? Because donation is something you don't wish to return to you. That's one question. And the second question is that you are making an uncertainty contract to the Takaful institution. So can we say that uncertainty, it is some of the career, because you are
Mm.
managing something you don't know whether will happen or not. The third question is that if a problem come to your business, you will get other people's fund to save your business. So can we say it is something looks like and gambling, because you get the money more than the amount you pay. So this big question, I'm asking this.
Okay, thank you, brother, for the question. The first question is related to the tabarruk. The second question is related to the gharar. And the third question is related to the maisir, isn't it? Okay. So the first question is related to the donations. Basically, yes, Takaful adopt a donation contracts. Okay. Donation contract when it is Takaful is adopt donations and mutual assistance. Okay. This takaful is a takaful tijari, a business of takaful. Okay. So what's the purpose of business takaful is basically to to manage the fund from the participants and also to help protect to protect the participant, to help the participant who are in need financially. Okay. It is not even though the takaful adopt a tabarruk or donation contract. So this donation contracts, it is applied in a business of takaful. Okay, normal donation when we donate, we do not have intention to receive it back, isn't it? Okay, so in takaful, yes, it's supposed to be like that. When the participant pay the contribution, they shouldn't have any intentions to receive anything. Okay, but because it is a takaful scheme, okay, in takaful scheme, uh, even okay, in normal donation is basically voluntarily, the normal donations, other parties do not have right to force us to make donation, but in takaful it is contractual donations, meaning that we pay monthly contributions, but at the same times we sign agreements of contractual donations, meaning that we are obliged to pay contribution, that donation regularly. Okay, it is enforced donation because we have agreed to participate into takaful. Okay, so this donation is applied in takaful business. So what's takaful business? To give protections. What the takaful operator do? They collect all the donations, and then the participants are in need, they will pay. Okay, when the operator pay the protection, it does not necessarily say that the donator, the participant receive back whatever that they have donated. No, it is a pool money. Now it becomes a pool money. Okay, so the pool money is is managed and used by takaful operator to help the needy. That's the purpose of takaful business. Okay, I hope that you are clear with it. Okay, donation. Okay.
Yeah, madam. Thank you.
Mm-hmm.
It's very clear.
Okay, welcome. So the second one is about not gambling, it's about uncertainty, isn't it? Okay. It's about uncertainty. Uncertainty on what? Can you repeat your questions?
Yeah, yes, madam.
Hmm.
Just when you are someone or participant paying fund to the institution of technical institution,
Hmm.
just they are managing uncertainty, risky. We
Hmm.
do not know whether it will
Hmm.
happen or not.
Ah.
So this contract, how we say? Uh, can we say this contract is also uncertainty?
Okay. Okay. Basically, we go back to the main contract of takaful, which is donation contract. In donation contract, one of the if I'm not mistaken, Shafi'i scholars say that in donation contracts, the subject matter is not necessarily exists. Okay, in donation contract, the subject matter does not necessarily exist because of takaful adopt donation contract, not a buy and sell contract. So the element of uncertainty here, which is the risk is uncertain, it is forgiven. Okay, it is just minor gharar because takaful adopt donation contract. So it does not matter where when the risk happens, but we know that there are risks. Okay, the thing is the takaful operator managing the fund. Okay, managing the fund in case the risk happens, so they will use the fund. So we go back to the basic contract of takaful, which is not buy and sell contract. Okay, so buy and sell contract, yes, the subject matter is necessarily to be exist. But in donation contract, the subject matter does not necessarily exist. Okay. Hmm. Okay. So clear, Abdullah?
Yeah, yes, madam. Clear.
Hmm.
Thank you so much.
Okay. Welcome. So the third one is gambling. Gambling. What's your question on gambling?
Yeah, doctor. And if someone of the participant is risky or loss, then
Hmm.
he or she will receive uh, other people's fund because to recover his or her loss. Though so they can receive amount more than their fund or other people's money. So if it not
Oh.
happen any problem, they will not get
Hmm.
anything. But if they face any problem, they will get more than their contribution. So just
Okay.
mm,
Okay, so basically, the amount of contribution, it is not similar among the participant. So it depends on the participant's profile. Basically, the operator will ask the participant to fill up the form, and they need to have details on the participant gender, male and female, smoker or non-smoker, and then work job sector, whether they working at the high risk of apa job sector or low risk of job sector, and then historical illnesses and family historical illnesses. So they will require that certain information to determine what amounts that the participant should have to pay. Okay, the contribution. Okay, so after that, okay, so based on the amount contributions, and then the participant will given options how much the protection that they have. Okay, how much the protection that they have. So when it is happens, basically it's um it depends on their because it depends on their background. Okay, we cannot say that okay this one this participant just make money because of they receive protections from the takaful. Basically, all of that is already determined upfront. The types of protections, how much is the protections, and then how much that the contribution they should pay. It should fair enough to all parties. Okay, so this party based on the level of risk, and then these are the total contributions that they have to pay based on the total protection okay that they want to have. Okay, so later on because there are many types of risks, certain risks the takaful operator need to investigate what are the real costs or the real loss happens to them, so they will pay lah on the claim, like admitted to the hospital and have to go through few treatments. So total cost of the treatments will be bear. So takaful operator will not pay more lah out of the total cost happens. Okay, and certain risks like a death, for sure death, know how to investigate the total cost of death, isn't it? So death benefit is already specified upfront, agreement between takaful operator and takaful participant. Okay, so the gambling element here, I think is very minor. The thing is, gambling here, we want to say that when something happens to the participant, okay, participant A, for example, it is money from other participant will help them. Okay, so it is win-win situations. This participant A will get protection, and then other participant will get reward by helping this participant A. Okay, that they will not get a loss lah. So they will get a reward from it, provided that the contribution that they pay is ikhlas. Okay, for the sake of Allah. Okay, and even if nothing happens to them, all the contribution that paid is actually have help others. Okay, who are in need, that managed by Takaful operator. It is win-win situations. Inshallah, we will be rewarded in the hereafter, even though we do not make any claims in this world. Okay, uh, is it clear, Abdullahi?
MashaAllah, Doctor, very clear. Very good. Thank you so much.
Alhamdulillah. Okay, any other question? Any other question?
Yeah, madam. Okay, what if you do takaful
Hmm.
from agent and then suddenly the agent is gone?
Hmm.
How to claim if you have problem and all those things? How to claim? Mostly they are doing from agent to agent. So if we don't know that agent,
Hmm.
that probably going to mess up. So is that considered a risk too?
Okay, no problem. Because agents, they only distribution channel. The product is not belong to them. Okay, so the product still belong to the company. So long we know that we subscribe to this Takaful schemes with this company. So without agent, we still can deal with the company directly. Okay, we can go to the company's website. Nowadays they have prepared online claims process, so we can submit our claims online without using agents. So that is why issues of what happens to these agents when the fintech comes, because now we can deal with the company using fintech. The technology that the company have, we can deal directly with the company with the agents. Okay, we can deal with the headquarters of the company. We can ask them directly about the claims and the protections that we have. Okay,
Okay, thank you, madam.
welcome. Any other question? Okay, no question. Okay, so no questions. I hope that you are clear with this, with the Takaful and the issues that arise in the industry. So if you have maybe interest to do research on Takaful, you are welcome to do so, because compared to the banking research, there are a lot on banking research, kan? But very limited research on the Takaful. Okay, so you are welcome to the research on Takaful lah. So with that, I pray that everything's will be eased for you by Allah. Okay, so and take care. Okay, so in our class, we surah Al-As in Tasbih Kifarah. Okay, thank you. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Waalaikumsalam.
Waalaikumsalam
Warahmatullahi
warahmatullahi
wabarakatuh.
wabarakatuh.
Thank you very much.
Alhamdulillah.
Uh,
Thank you, Dr.
uh,